Bitcoin holds above 100K for a fifth straight week. ETFs see record inflows, and Trump media files to launch a new fund. These stories and more here on The Effect. Hi, I'm Nate Martin, and this is the Bitcoin Effect. Bitcoin has reached a major milestone, closing above $100,000 for the fifth week in a row. That's caught the attention of both investors and analysts, especially with so much uncertainty in global markets right now. Even as traditional markets hit some bumps, Bitcoin has managed to hold steady, even after being put to the test during the recent tension between Israel and Iran. The price briefly dipped to around $102.6 when the news first broke, but quickly rebounded, settling back above $104,000. There's still an ongoing debate about Bitcoin's behavior in moments like this. Some investors point out that Bitcoin often acts like a risk-on asset, tending to drop alongside other markets when uncertainty strikes. On the other hand, many highlight Bitcoin's resilience, recovering quickly after the initial dip and holding steady through the headlines, as evidence that it's starting to act more like a safe haven asset. This week's price action gave supporters of both views something to point to. Spot Bitcoin ETFs brought in another $1.3 billion in inflows last week, marking the ninth consecutive week of positive investment. That kind of consistency shows that institutional demand for Bitcoin remains strong, even as broader financial markets experience volatility. BlackRock's iShares Bitcoin Trust led the way, now holding over 662,000 Bitcoin, which is more than 3% of all Bitcoin in circulation. Some see this as a sign that Bitcoin is becoming a staple in more investment portfolios. Others warn that so much Bitcoin concentrated in one fund could be risky if investor sentiment turns. Trump media filed a registration form with the SEC this week to launch a new fund. If approved, this new fund would be made up of 75% Bitcoin and 25% Ether, with Crypto.com slated to handle custody and liquidity responsibilities. A couple of weeks ago, the company filed to raise $2.5 billion to build a Bitcoin Treasury. With this ETF filing, they're moving forward on that plan and offering investors a new way to get regulated exposure to digital assets. Still, with so many crypto ETFs already out there, it may be hard to stand out. More than 60 publicly traded companies now hold Bitcoin in their corporate treasuries. The most recent entries into that fray include American Bitcoin, Genius Group, and Bitcoin Depot, all of which have direct ties to the Bitcoin industry. While these companies are Bitcoin-centric, we're also seeing non-Bitcoin firms announce plans to shift their treasury strategies toward Bitcoin. SolarBank, a Canadian solar energy developer, Davis Commodities, an agribusiness based in Singapore, and Universal Digital, a Canadian investment firm, have all announced their intentions to add Bitcoin to their balance sheets. GameStop announced a $1.75 billion convertible note offering this week, with the proceeds widely expected to support its ongoing Bitcoin strategy. Since March, the company has acquired roughly 4,170 Bitcoin, valued at around $450 million. After the announcement, shares of GameStop plummeted nearly 20% as investors weighed the impact of the new debt and the company's continued pivot toward digital assets. GameStop's shift from video game retail into a Bitcoin treasury approach follows a playbook set by companies like MicroStrategy and Metaplanet, both of which have made Bitcoin a central part of their balance sheet strategy. The move is attracting both interest and skepticism from investors. That's it for this edition of the Bitcoin Effect. If you've enjoyed this episode, don't forget to like, subscribe, and hit that notification bell so you don't miss our next episode. We'll see you next time.